Welcome, let's get going. So I'm going to just give you a brief talk on all the essentials on how to have a career in day trading. So first of all, welcome to everybody. Anybody watching this on the streaming on YouTube, by all means, just punch in questions and I will answer them as I go along. Or if I don't answer them straight away, I will come back to them. Okay, so what do you need to do to have a career in day trading? Well, I think as with any other career, you've got to treat this as about being a professional. So to be a professional, you've got to have the knowledge, the skills, the motivation to do the background work. And this is what a lot of people don't like to do. And you've also got to have a trade plan and the patience to implement that trade plan. Because if you look at the way in which we're looking at the FTSE here at the moment, you can see how, if you look at this big fall in the FTSE, you think to yourself, right, there's a lot of profit in that. If I can capture a big move like that, then I can make a great living and everything will be fantastic and I can give up the day job, etc., etc. But look at what happens on this. You get a lot of sideways action. Then you get the breakdown for 2 days. Then it sits on top of this support. So anybody who's got some basic technical trading skills, some of you might be thinking, if you're seeing that close higher on there, that this is a market that could pick up from that dip and go back to the highs. But of course, then you get another big day to the downside, another higher close, and then another move down to the downside. So if you're going to survive in the trading game and you're going to make consistent profits and the most profits possible, then you need to be acutely aware of the sort of sequence that you can see in the market. You need to be able to trade with the trend. That's an obvious statement in trading, trade with the trend. But 75% of people who trade, give or take a few percent, lose money. So you've got to ask yourself, if you're going to attempt to make a career in trading, how are you going to be part of the 25% that make money? And if you want to make a living, you've got to be in the top 10% that have a very high success rate on your trades. So the only way I think the only way you're going to do that is if you've got all the things in place that are going to enable you to be a professional trader. So it's like anything else. You're going to do it, you've got to do it well. So what are the ingredients? So let's get back over what I started off talking about. The ingredients is, of course, the knowledge. You've got to understand how markets move in the sequence, in the what I call the code of trading, in order to understand how you can make the most profits. Then you obviously need the skills to implement that. And the other thing is, there's two other key ingredients. It's the right mental mindset that includes everything from patience and handling losses, as well as handling gains. Because this is a very emotional roller coaster. If you get trapped on the wrong side of trading, you'll just end up in a huge emotional roller coaster. If you're a professional trader and you get a loss, you just examine why you made a loss, monitor it, put it in your system, and then move on. But in the early days of trading, and I've been there and done that and got the badge, temptation is to, if you've made a loss in trading, one of the temptations is to get back in the same trade, revenge trading. And that is, of course, the worst thing you can do. But the only way you're going to shake that out of you, the only way you're going to avoid revenge trading is if you've got a very specific skill set and a trading plan that is going to keep you the right side of it. So let's talk about, of course, the other thing is, the obvious one is capital. You know, if you're going to make a living out of trading, you can do it from a small account. You can do it. You can start from as little as £500 or £1,000 in your account, but don't expect to make a living out of that in 12 weeks, 3 months. Don't expect to make a living out of that in 6 months. If you're starting from a small account, yes, you can build that, and yes, you can make a living out of that, but it's going to take many months to build that account size up before you can risk the kind of capital that is going to give you a decent return. Yeah, so it's not impossible. It's definitely doable, but the speed in which you can become a full-time trader is going to be dependent on all the things I've just listed, plus your ability, plus the amount of capital you start with. So one of the biggest mistakes that people make is they think, you know, you've got a £500 or £1,000 account. I know how to trade. All my trades are going to be winners, or 70%, 80% of my trades are going to be winners, and I can start making a living in about 8 weeks' time, 5 weeks' time, 8 weeks' time, and everything be hunky-dory. That's not the way it works. At least it's not the way it works for most people, which is why you got such a high failure rate in these accounts. And when I say 75% of people lose money, this is what my broker quotes. Every time I open my account, it says to me, you know, 75 or 76% of people are losing money on this platform. So let's talk about technicals for a moment. Let's come away from all the obvious things that I've just listed. Let's talk about technicals, because at the end of the day, you're only going to make money if your technical skills are good enough and you understand the code of trading to capture moves like this. The reason why I've looked at the FTSE today is because it's such a slow market. I don't often trade the FTSE unless I see a really, really good setup. So that's why I chose it, because it's slow. It's potentially a difficult market to trade, because you need to be very, very patient. And somebody, a very famous trader, it's something like Paul Tudor, said you need the patience of about 9 or 10 people to actually make a living in this trading, because if you haven't got extreme patience and a discipline, you're just not going to do it. It's as simple as that. So you've got to face facts. If you're a person that's not good at self-discipline, then you've got to ask yourself, you know, can you learn the discipline you need to trade this market, or is that going to hamper me and mean that I can't trade? So okay, so in terms of the sequence of trading, one thing I do in trading, and I could give away sort of a key part of my strategy here, is I always like to put the Fibonacci ratios on the previous year's trading. So every year, every time we get to the end of a calendar year, the first thing I do is I rip off last year's Fibonacci ratios, and I put the current year Fibonacci ratios. So here you've got, in 2022, we had a high of 76.88 in the FTSE and a low in October 13th of 67.08. So why do I do that? Because the code of trading is Fibonacci ratios. So if you look at the bigger picture and you want the bigger profits, even in day trading, as well as investing, you need to know exactly what the sequence is in any one market. And I think the Fibonacci ratios can really offer you out very, very key signals to do with the way in which this market could or couldn't move. So let's take an example of what happened here in March, early March. Early March, this FTSE made, broke above this extension. So this is a 127 extension on the FTSE. We broke above it, and then on this day here, we close underneath it. So that's your sell signal there. It's about the middle of March. I'll just enlarge this so you can all see this clearly. So on this day here, the 22nd of February, you had a sell signal on the FTSE. So if you're a day trader and you see a major sell signal on the FTSE, then every time you get a pullback into that resistance area, then you're short. And particularly here, by the time you get to the 7th of March, you're underneath the 20-day average and you're underneath that extension. So at that point, you need to get short the FTSE and stay short the FTSE, ignore any consolidation periods that maybe go against the trend. And then look at the 20th of March, you see a market that has come right back to pinpoint or pip point accuracy, has gone right into 50% of the previous year's range. So let's fast forward to where we are now. So you get a lower high up here in end of April. You get another major sell signal on the 24th of May. So all we're doing at the moment, well, up until middle of June, all we've done is pull back into that sell signal and retested that major resistance area. So I'm shorting the FTSE here on the basis that I'm ignoring these higher closes here. We've had higher closes throughout this drop. I'm ignoring these higher closes and I'm selling into any move higher, into any significant move into a key resistance area higher. So that, and there's various ways you can do this. You could close all your trades at the end of any one day, so you don't have any risk overnight. You could have a core position on a key signal and then add to your core position and trade around the core position in the coming days and weeks as this sequence runs its course. Or you could sit, the other way to do this, and this is obviously we're talking about being day trading, but as an investor, if you've got a major signal, you could literally just sit there for weeks, days and weeks on end, and wait until these ratios come into play. So I've been shorting the FTSE at these highs here. We're under the 20-day average. We closed lower. We had this decent drop from the 16th of June into the 26th of June. And so now I'm expecting this to break 7,400 and come down to 7,200 and then start to make its way down to 7,080 and ultimately 69.39 if this really gathers a pace. Okay, so that incorporates, so what I've done there is looking at the bigger picture, looking at the way in which my trade plan is configured and trading in line with my trade plan so that all the trades I take are tied in with a rigid set of rules. And that's the boring bit of trading, because that's why, again, coming back to that 75% who keep failing, that's why so many people start failing, because they just don't have the discipline in place to stick to their rules. In fact, most people, in my experience, who come into trading, particularly in the early years, and particularly day trading, just don't have a trade plan. Simple as that. And so, you know, you wouldn't go to a dentist who's got a GCSE in dentistry, would you? as you wouldn't sell a house and use a lawyer for your conveyancing that's only got an A level in law. You know, trading takes an inordinate amount of effort, discipline, and mindset, and measuring your own performance to get this right, and to pocket that money to either support yourself and earn a living from it, or ultimately you should aim to be an investor as well as a day trader, ultimately further down the line, which is what I do, to manage your whole asset base, all your assets and all your funds. Okay, so that's what I think is involved in making a career out of day trading. It's about having all those things lined up, all those dominoes lined up, so that you can conduct yourself properly and trade for a profit. And what you should get to the point, just as driving a car, you should get to a point where all this becomes second nature. And you should do what Mark Douglas describes as in trading in the zone. So let's have a look at another market and have a think about what's going on in that market. So I've been talking to my group about my trading room about oil a lot, because I think oil is a very fascinating chart. So again, what I'm doing here is, let's just talk about making a living out of oil for a moment. What I'm doing here is I'm buying the contracts in the futures market on one level, because it's a lot of leverage. I can get decent profit levels, and I'm also using a couple of other accounts to trade oil to boost that income and ultimately drive my investments. For example, on the day trading on this, I'll just show you a quick, let me just grab a screenshot. Where are we? I think it's here. All right, let's call up the software so I can show you the software. Right, so this is sorry, before I move on, this is a chart of weekly oil. This is why I'm bullish oil, because I think what has happened over here is potentially happening over here. So that could, I'm looking to see if oil can lift up into this $90, $100 mark. Right, back to what I was going to talk about. I could just go and find where is it? Yeah, here it is. So here is the oil trade yesterday. So I picked up a low down here, and so I got 600 quid, nearly 600 quid on when I did a screenshot on this account. I did actually take it off quite close to here, which is probably just as well, because it did, whoops, that's not what I wanted to do. I did take profits quite soon after this. I think I took around about 550, 560 pounds profit, because it hit a lot of resistance up there. I took it off. So what I'm doing at the moment is I'm holding a core position in the oil, day trading pullbacks, using my system and looking to see if I can trade that up. Look to see if I'm right, because what I need this to happen is I need this to stay above 70. So the 22 lows was $70.20. So if we stay above the $70 and ultimately close above this pink band I got here, close above that trend line, then I think this could pop. And if this pops, this trade pattern is very, very powerful. So you can see we gapped up here, hit resistance and fell right back again. But if this can stay above the 70, close above the 71, and then I think this could really pop and go back up to 80, 85 plus. So I'm holding core positions down here, adding to these positions here for my day trading account. And then I will continue to do that for as long as we can move up into these levels and the pullbacks get bought. If we close underneath 70, this will get scrapped. And then I start shorting pullbacks to 70 to see if we can get back down to 65 or lower. But to do that, I have to have a good plan to manage the trend and stay the right side of the trend in oil. I have to have a risk management system that enables me to maximize my profits and cut my losses. And I have to have a trade plan that identifies charts like this that are going to give me the maximum profit and stay in the trade to support myself in my professional career as a day trader and an investor. Okay, so I think if we talk about the common issues, common problems with trading, particularly in people's early stages of the journey, what some people do is they start making let's look at my pen again. You know, their account, they start off at a certain point with their account. Let's say they got £1,000. And then in the early stages, you know, maybe they make a little bit of loss. Maybe they have a good little run, make a couple £100, and then they start to think they got bulletproof vest, and they start to trade more, get greedier, look for bigger runs, and they start to take bigger risks, and then they end up losing all that profit and going underneath their entry point. And then maybe if they're smart enough, then they'll stop what they're doing, slowly make some profit back, and then again think to themselves, okay, I've recovered that position, I know all about trading, start increasing their position size, and then make even more losses. That's a typical journey for a trader. What a trader needs to do is they need to keep their capital to one side. I believe they should be, I think a very, very good way of starting to trade is either trade very, very small size. In other words, 20p on oil. I think it can go as low as about 25p on the Dow, I think. Either that or just have a demo account. Prove to yourself that you can stick to your system. You understand the system of trading that you've decided to use in your strategy. You've proved to yourself that you can be disciplined, and that is the absolute crucial thing to trading. Most people don't have the discipline for trading. It's as simple as that. Yeah, us human beings, we like to be busy. We're greedy. We like to make money, and these are all the things that hamper your career in day trading and investing. You know, it's your emotions, and the way in which you have or have not got control of your capital. That's going to be the difference between you making profit or not. Anyway, so if you have the system, you prove to yourself that you can make it work, you stick to the rules, then you can ultimately have a gentle curve. And £1,000 account, if you are trading well, trading to a good successful strategy, you should be doing over a period of 3 to 6 months, you should be doing a good 50% over a period of 3 to 6 months at least. I was mentoring somebody a few years ago now, but he had a large account he made, I think he made about £150,000 in a month. And then 2 months later, he'd given it all back. He'd made an I think his account was about 100,000, give or I can't remember exact figures now. Very wealthy chap. He did stick to the plan. He was disciplined. The market went in his favor, and he day traded every day, almost just about every day for a month, made 150,000. And I think he just literally gave it all back. In the end, he just gave up trading soon after that, I believe. And that's not uncommon. I've had a lot of people come to me who've made a lot of money and given huge chunks back, or just people who just never made a profit in trading. There are people out there who've been trading for 1, 2, 3 years, just never made a profit in trading. So because the most important elements of trading are boring. It's boring learning risk management. It's boring learning and having the patience to see how this can pan out and trading on the right side of that as it does pan out. At the moment, if you look at, let's go back to the S&Ps. Yeah, you get significant periods. Okay, you got 2 big drops here from March 6th to March 13. You only get 2 big, it's a daily chart. You only get 2 big days on the downside. And then you get several days moving sideways. You get, I'm looking at, you get a big push up on the 31st of March. And then it does, well, you get a couple of days in 27th of April. And it does nothing. You stay in that range until you break up on the 17th, 18th of May. So these markets move sideways 80% of their time. So how are you going to make money in a sideways market? Well, you've got a few options. Either you stay away from a sideways market and go and find a market that is better trending, or you have short targets. Because if you've got a market that's only moving, breaking out big time 2 days in a row and then going sideways for 3-5 days every week, you've got to have an incredible level of discipline to make a profit in that, or a lot of leverage for small moves. What would I suggest? I suggest you, I think the best way day trading is to actually have a core position and trade around it. I think the most successful day traders are people who take small moves with the most leverage that their risk management will let them do. So I think trade the first hour, make your money on a small position into support or into resistance, close your account, and then walk away. But you've got to have the day trading skills to do that. All right, anybody who wants to do that, the next program I'm running is next Monday. Let's just drag this across. And then we go through the strategies. Oops, is that not? Let me just. I have, for those of you just joined us or online on YouTube or in the room, I have recorded this, so I'll send you the link. So if you come on the program, to get that discipline and to get that the skill set and the mindset you need, the system that I teach will go through the gap strategies, the open strategies, the bigger moves, the breakouts, and the intraday reversals. They're one of the most profitable setups that you can get in day trading, intraday reversals. And the system teaches you, the system is based on a golden anchor. So everything that happens in that anchor chart every single day will be the biggest factor in whether you go long or short and where your target is. So every single day we set up the anchor chart before the markets open in the room. And then that allows us to read off the levels that we're most likely to see in the market on that day. And of course, if you come on the program, it's a 4-hour program, you get to go into the live trading room. Opens before the US. I only trade the US because that's where all the momentum is most of the time. And the DAX has been very volatile. DAX has been good to trade. The FTSE, as we've just shown, is very, very slow. Oil, I think, is brilliant. If you get a big move in the oil in the London session, there's no need to actually trade the London session because the US generally drag it right back to the level that London traded from. So you've got the live trading room, and then once the trading room's open for normally about an hour to cover the open, then you get the alert system kicking in. So any further trades after the room's shut, you get alerts. And then there's a general, the alert room and the chat room is now one. I've combined them. Anybody who wants to ask questions or talk about trades that are ongoing or trades that we're managing, you can do that in the same Telegraph room. All right, so the next one is next Monday. So the what you need to do is click book the full program, and there you go. The next one is the 10th of July. So I'll just give you the links for this. You want any more information or details, then message me from the website or my Facebook page. There's the link for the program. I'll post that in the YouTube as well. And there you go. So we're very successful in the room. I've got a batch of trades here. If you are a member of the meetup, I am trying to keep track. I'm trying to do screenshots every day and update the photo album every day on Meetup. So for example, you go to this group. You go to this photo button, you will see that I've already posted. I posted a lot in June. I've not posted much in July, but I will update that. There's some June trades. Traded the gold on the 28th, £50 a point off of that support. That's another gold trade. Bear with me one moment. I just need to pause for half a minute. Right, and so on. There's loads of trades in there. Oil, 600 odd pounds a point off of that support. My cat's trying to break my door down, and now it's all over my desk. Never mind. Anyway, you get the idea. You can go and see that. So yeah, like I said, one of my favorite markets is the oil. I like day trading the oil. I've been talking about this in our live sessions. The other thing I like investing in, I just think we're in a commodity super cycle. So I'm trading wheat, Getting ready to get back into wheat. We had a huge burst from $5.80 to $7.70. Lovely move. That's wave one. So I'm looking for this is wave two, pulling back into wave one. Now I'm getting ready to buy back into wheat. And the next target would be $8.70. And ultimately I'm looking for $10 plus. All right, so I like trading the gold. I still think, I'm still hoping that we are going to get a push above the 20-day average at the moment. So I'm trading light on the gold at the moment because we're not able to close above the 20-day average. I'm looking at this gap down here at 1865 as well. Orange juice, I have done in the past. Orange juice has been lovely and volatile. Lovely breakout pattern here on the 26th of January. Looks as if it wants to come back to 24 at the moment. Is that up to date? Let me just check. Yeah, that is up to date. So yeah, I think we're going to see 24. And I hope to see that come back down to some lower levels of support. You interested in orange juice? You in orange juice? So this is a big wave. This is potentially a nice wave pattern here. Let's talk about wave patterns for a while. In fact, I had a 1, 2, 3. No, it's not working. So we've seen a distribution pattern over here. So yeah, like I said, I would like to see this come down to 24. Come back into this area here, and then see if we can push back up. So it's a short orange. I wouldn't short it personally. I would buy pullbacks. I think it was, if you wanted a short orange juice, I would have certainly have shorted it up there. Certainly I would have shorted it on the 25th of May. I think this is a bull flag. And I think, right. Anyway, let's get back to day trading. Orange juice isn't day tradable for me. Because if you look at intraday, but let's compare this on a 30-minute chart as opposed to, see, it's quite gappy. Look at oil on a 30-minute chart. I think oil to me is much cleaner. There's more flow because of much higher volumes on something like oil versus orange juice. But if you look at oil versus Dow and DAX, let's do that. If you look at DAX on a 30-minute chart, this is quite smooth. The free to join room is just the Wealth Club room where we talk about bigger picture stuff. Otherwise, the main day trading room is the room in which people enter once they've done the program. So here on Friday morning, last Friday we broke up. We got non-farm payroll this week. We got US jobs this week. This is DAX, isn't it? Yeah. So in the morning, last Friday in the European session, which of course this is a European market, that came back to that purple line. That purple line's a key pivot in my book. The cost is, I'll come to that in a second. Yeah, so the DAX versus the Dow. So you look at you get deeper retracements, higher volume and more volatility in this market. So that broke up on Thursday at the US Open on Thursday. Obviously, it's US is off today, celebrating independence from the UK. But so if that holds, then that could pop up and do another leg up. So whatever happens on, I think we may see a lot more consolidation until we get non-farm payroll out. In the meantime, I'm looking for oil. I'm buying pullbacks on the oil, as you've seen on my charts, because when oil does this, if you find these breakout patterns, they can last a reasonable amount of time. And even the pattern down here, I don't trade off a 30-minute pattern, which is why this is not marked up. So that broke up on Wednesday at the US Open, and so on. Right, the cost is this. So if you go to this page and then click on the booking form, it's 575, which includes the 4-hour program and every day in the room for 4 weeks. So the room is open Tuesday to Friday, plus the alert service you get after. So it's a very intense product, because you get a lot of my time and attention both at the open and after the open. And you get regular update sessions as well. I did a training session yesterday afternoon for the group, and I do that regularly as well. So even you can take the program as many times as you like. If you want to do a retake, in which I recommend you do retakes, I very rarely make a change to the system because it works so well. It's so brilliant. But it's worth doing a retake just to do a full refresher of the ins and outs of the system anyway. The system is not complicated. It is not complicated, because if it was complicated, you and I wouldn't use it effectively. Any trading system, any trading plan, whatever timeframes you're using, whatever your risk parameter, everything has to be, as in anything else in life, it has to be simple to be understood and to be effectively used. So the trading system, it's got several components, but it's a bit like driving a car. Once you learn to use the system, it becomes intuitive. And once we've got a lot of momentum, I fire off a lot of signals on a very, very good day, which is on the whole 1 day a week. You get great days on the whole about 1 day a week. Then I'll fire off 2, 3, 4 trade entries. On a normal day, I'm taking 1 to 3 trades a day. On a really good day, I'll be in and out several times on a trade. Excuse me. Yeah, but the point is, it's based on. Excuse me 1 second, just clear my throat. I do all the prep. I've got my head round where I think any one of these main markets are going to go. So I've done the prep. I'm looking for very specific targets. The anchor chart is giving me, is drilling down to smaller time frames to give me more precise targets, so that we got a lower risk and a higher reward. Because I'm using a lot of leverage. At times I'm using quite a few £1,000 worth of, quite a few $1,000s worth of leverage on my US futures account. So, as you'd expect, I need to refine my entries as well as I can to limit my exposure. So if a trade does go against me, I need to get out quickly, and B, minimize my loss and reassess. But I'm taking the trade entry in the first place is based on a check sheet that goes right from the top daily chart and the weekly chart to right down to the smaller time frames. And yes, I do use, my trade is refined. Questions coming on YouTube about the smaller time frames. Yeah, I do drill right down to a 2-minute chart, but I use the 2-minute chart in a very, very unusual way, which is all linked to the whole system, to give me a very fine level to watch on the charts. And of course, I'm using a futures account, so I can see where all the volume is coming in on certain price levels, which is one of the reasons why I use the futures chart, futures platform. But yeah, so that's why I'm buying the oil. That's I've traded the gold a lot less recently. I did take the gold off the low last week, but I've not traded it this week. What I would like to, I tell you what, if we get a good number on Friday on non-farm payroll, what might happen is, I'm certainly not going to trade. I don't go into these big data numbers with a trade on, certainly not in the futures account. I think it's potential financial, the risks are too high to go into trades with a lot of leverage when there's data on, because the volatility you can get. I've seen 1,000 pip, well, not 1,000 pip, I've seen several hundred pip moves in the blink of an eye on some of these charts. That's why you need to stay out of the market on days like US jobs, and particularly Fed days, rate decision days, to protect your account. It's a never-ending buffet. So if you miss a trade on one day, quite often the best days of trading oil is the day after invents, not the day when the invent number comes out every Wednesday. Quite often Thursday is the best day to trade oil, because you've got all the volatility on the invent day and all the pullbacks the next day. And that's the same with major decisions. For example, if this gold can't get through this 20-day average and comes back and really backfills, then I would love to be trading gold around this level and back into the 50%. I'd absolutely love it, because this was a huge move that took us into 2075. However, if this breaks up here and we end up flying up here without doing that, that's fine. That suits me. I will stand back from the data, keep out the volatility, wait until the market calms down, and either that day, later that day, or the next day, I'll pinpoint the level that I want to buy and trade it up. You can see why I was shouting about oil when it was down here, because this is a huge move down here, but we're not getting the big bars here and the follow through on the data. Far from it, we're getting, the volume's falling off and the chart's not able to get through the 20-day average. So I stay away. You know what? One of the key things about being a day trader is knowing when not to trade. Particularly if you're using leverage. If you're losing a lot of leverage, the last thing you want to do is trade these horrible range-bound markets. What I need is what I need is momentum. My system, every system, or almost every system, relies on momentum, unless you're trading in very small tick charts and 1 minute charts, which I don't do. All right, any final questions? By all means, if you want to have a chat about coming on the program, you're very welcome to give me a call and have a chat about the system and the program and what you get out of the room. But yeah, the room's good fun. I mean, it's good. Trading's a lonely business, so I like being in the room. I like talking about how I set the charts up and why I'm taking trades. Any other questions? Okay, so what I'm going to do for the next these Tuesday sessions are regular sessions. So what I'm going to do next week is I will talk about a particular part of the system in more detail, and show you a bit more about how the system works, so you can get your head around how I make trade decisions in a bit more detail without giving away the system, of course. Brilliant. Have a good evening, everybody. And I will update the main Telegraph room. Anybody not in the Telegraph room, the free Telegraph room? Let me just go and get the link for that. Stay in the room if you want the link for that. Otherwise, forget these things. Find it. Oh, I got it. Right, anybody not in the free Telegram room, that's where it is. Brilliant. Thank you very much, guys. Thank you for listening. Have a good evening, and I will talk to you very soon. Thanks.